My question, I'm interested in hearing you guys speculate about how much the anticipated Fed rate hikes will increase mortgage interest rates. And then do you think that will have enough effect to actually lower home prices or just slow the rate of acceleration a little bit? That's what I got. Thanks.
There you go. That's John's question.
I love that question. Did you know that when the feds raise rates, mortgage rates go down? And everyone's listening here is going cross-eyed right now. It's like, who is this mortgage guy? He doesn't know anything. What is he talking about? So the biggest misconception out there about rates and the feds and all that stuff is that the feds don't control mortgage rates. What the feds are talking about is the fed's funds rate, right? And so those are short-term rates. And so short-term rates like auto loans, personal lines of credit, home equity lines of credit, things like that, short-term rates and long-term rates are inverse from each other. So when short-term rates go up, AKA when the Fed raises rates, those short-term rates are going up. Because of that, long-term rates typically come down. So in March, when the Feds come out and they're expected to raise rates in March, as soon as they make that announcement, we're going to see the mortgage market get better. And we're going to have an instant basically drop in interest rates. It's probably not going to be anything crazy. It might be 0.1%, but it's still going to go down. It's not going to go up. And so it would be better. So with our recent rise in interest rates, right, with just regular economic factors just kind of going up and talks of inflation still and things like that, with rates kind of trickling up, it's going to help rates actually come back down or at least stabilize when the Feds start raising rates. So keep that in mind as far as moving forward here in the future, because when the Feds do raise rates, you will see that mortgage rates will come down, and we'll get a lot of calls about it. And people are going to be like, this is crazy. I don't know, the world's coming to an end because they just raised the rates, but mortgage rates went down. Well, it's because the Feds don't control mortgage rates. They're running the short-term rates. Now, as far as what that's going to happen to the real estate market or what type of impact rising mortgage rates is going to have to home prices, I just don't think it's going to level it off a whole lot. I think home prices are going to continue to rise. Over the last 2 years, we're probably looking at 12%, 10 to 12% appreciation. It probably will slow down a little bit, but we're still probably going to be at 7 to 9 this year, even with mortgage rates going up, because the whole thing is that a bigger driver of home prices is supply and demand curve. That's the number one thing that runs prices.
Supply and demand. And ultimately speaking, demand is driven by what people can afford to a degree. But the bigger factor there is not interest rates. Even though houses are crazy affordable as far as that is concerned, there's also the other aspect, which is just we have a near full employment type situation. Anybody who wants work is largely able to find it, according to all of the Fed bigwigs. That's not what they're worried about. Unemployment's like below 3% for most demographics. The issue is everybody's got money to spend, and there's only so many houses to spend it on.
Yep.
And as long as that's true, and as long as mortgage rates are in that affordable bracket, you're just not going to see a strong pressure to drive down home prices. Now, that said, if interest rates on mortgages went up to like 7% or something, like double where they're at now, you would see a slowdown in the market, I think, just because of, now you're talking about higher payments on those same houses and stuff. But I don't think that you would see a reduction in price based off of that. That would just be curbing the demand part of the side.